At its peak, the company was valued higher than the GDP of some small nations. Its founder was treated like a visionary who had cracked the code of modern work. Glass-walled offices carrying the brand's name appeared in the most expensive cities on Earth, and everywhere they opened, the same message followed. This wasn't just a business, it was the future. The idea sounded almost too perfect. Offices didn't have to feel cold or permanent. Work could be flexible, creative, and communal. Startups, freelancers, and global companies could all share the same space, the same energy, the same ambition. What the company sold wasn't desks or buildings, it sold belonging. In the beginning, it worked. Demand exploded. Investors saw more than a workspace company. They saw a movement. Money flooded in at a historic pace. Each funding round pushed the valuation higher, and with every new check, confidence grew louder. Expansion became the goal. Speed became the strategy. New locations opened one after another: New York, London, Tokyo, Shanghai. Entire buildings were leased for decades at premium prices, redesigned with luxury interiors and bold branding. Internally, the message was clear: growth mattered more than anything else. Profit could wait, scale could not. Behind the scenes, the numbers were quietly drifting out of control. Long-term lease obligations stacked up while short-term customers came and went. Expenses ballooned, losses deepened. But belief filled the gap where discipline should have been. As long as the company kept growing, no one wanted to stop the momentum. The founder's confidence only strengthened the illusion. He spoke about changing the world, about redefining capitalism, about building something bigger than a company. Investors listened, employees believed. Questioning the vision felt almost disloyal. Then came the moment meant to crown the dream: going public. For the first time, the story had to be written in numbers instead of words. Financial documents exposed what private optimism had ignored: billions lost, no clear path to profit, and a structure that gave the founder extraordinary control over a company built on investor money. What had been marketed as a technology revolution suddenly looked like a high-risk real estate gamble wrapped in inspiration. The reaction was immediate and unforgiving. Confidence evaporated. The valuation collapsed in a matter of weeks. The IPO was pulled, and the same investors who once fueled the dream now rushed to protect themselves. The fall came fast. Leadership was removed. Thousands of employees were laid off. Expansion plans were abandoned. Offices once filled with energy and belief became symbols of excess and miscalculation. The company survived, but only in a smaller, quieter form. The bold promises were gone. The myth was gone. What remained was a business forced to operate within reality. Today, the brand still exists, and people still work inside its buildings. But the dream that convinced the world it had discovered the future of work is no longer alive. Because the market doesn't care how powerful a story sounds. It only cares whether the truth can support it. And this billion-dollar dream didn't collapse because the idea was wrong. It collapsed because belief grew faster than the foundation beneath it. That is the real rise and the real fall of a billion-dollar dream.